Okay, good evening, everybody, and thanks for joining. So tonight we're gonna just have a look at where we think cryptocurrency is going over the next 6 months, when we've been talking about for God knows how many weeks about the conclusion of this potential 4-year cycle. But why actually I'm going to have a discussion with you that actually July might be a pretty pivotal month for that to occur. So as always, if you've got any questions, feel free to drop them in the chat. I'll try and get around to them as soon as I can. A little bit of news, a lot of charting, a little bit of discussion about my thoughts on July and this month. There's a couple of questions already submitted to me, but other than that, we'll just jump straight in. So the standard chart here, and you can kind of see with Bitcoin, I mean, I will blow it up, but 3-day time frame, last 3 candles, I mean, we've done next to nothing. I'm just looking at the opening and the closes, but we basically ranged from 8,000 to just over 9,000 over the last 9 days. $1,000 range, less than 1%. And yeah, we've wicked up and we've wicked back down, but we really haven't seen much of that move. We've not really even retested that 106.5 line that we drew last time. So definitely some suppression of price. Obviously not helped by the fact that it was a federal holiday in the United States on Friday. So we basically had a 3-day weekend. We have had a few news events, whether it be tariff or the big beautiful bill and all that kind of stuff, which may not have played out yet across the markets. But to me, it just kind of feels that we're awaiting a big move. Price suppression like this normally means at some stage we're going to see an explosion. We'll talk about which way that might go a little bit later on when we get into some more charts in there. Interestingly, though, Bitcoin dominance, we have started to see that tumble a little bit. From that high of 66, we're now down to just about 65. I say tumble. I mean, we've fallen 1%. But, Bitcoin's up, but altcoins generally are outperforming Bitcoin over the last, 3 or 4 days to see that move happen, which is good to see. And that's kind of reflected when we have a look at the total 2 chart there. That $1.1 trillion line, which I don't know why it's not here, but it used to be. It's yellow. Of course it is. Let's just change that to white. Actually acts as pretty good support. We are starting to see that move up. Now, let's not get excited. We've wicked up to 1.18 before coming back down in recent history. 1.2, obviously, next hurdle to get to. But the golden line I'm looking at, 1.25. We really need to get over that. And despite altcoins, decent-ish move against Bitcoin over the last few days. For me, still lagging quite significantly. This chart here shows perfectly Bitcoin at relative all-time highs, and altcoins nowhere near even where they were in December. Still $500 billion away from where they were. So some work to do. And unfortunately, actually, not often we say this when we do see altcoins moving, but one of the least performing that we monitor anyway over that period is BitTensor, still lagging around that 320 level. We've said that's been the Gandalf level, local Gandalf level for a while now, really is playing around that. It's still kind of continuing to make lower lows and lower highs. So that's not true. It's a flat bottom. It's certainly lower highs compressing into something. Obviously, we're going to look at this in better time frames later on, but whether you want to kind of draw, something like this and like this, I've got a lot of lines there, so I'll just get rid of a couple of these. Maybe we are seeing some form of compression. That would be a falling compression, potentially the room there for a move up to the north. I am still in my sidestep, and I'm going to give you my thoughts on that a little bit later on, but this is where we currently sit right now. Okay, I thought I was going to talk about tariffs today, but in good old, let's just move the problem away, kicking that can down the road, it looks like the tariff deadlines have been extended once again, now looking at the 1st of August. I still think, and I might be wrong here, officially the tariff deadline is tomorrow, the 9th of July, but effectively no revised tariffs, or actually reverting back to the tariffs that were proposed on April 2nd, they won't take place until the 1st of August, which is effectively a delay on the tariffs. I don't know why. We can speculate on that all we want, whether or not Trump's had to move the goalpost because all these nations are putting up a stronger fight. But it doesn't look like many have actually come through. There were some talks today. I didn't see it finalized, so didn't think there was any point in actually bringing it up about the EU maybe getting some agreement in around 10% of tariffs. That would be a big one. EU, China, two big ones that we're really looking for them to resolve. EU, obviously, the euro forms such a strong part of sort of the dollar basket, etc. So trying to get some sort of agreement there and settling that is going to move the markets. But we haven't seen, there was talk that even a delay would be seen positively for the markets. But in my humble opinion, which isn't that humble, that doesn't necessarily seem to be the case. We haven't really seen the markets move over the last 48 hours since this has been widely spread, widely known that we were pushing them back to the 1st of August. With that as well, we've also had Trump's big, beautiful bill that actually made it through Congress on Thursday last week, just before the holiday close. And effectively, this is just a bill that relaxes the terms and how they can go about borrowing money. Again, although it is pretty highly contentious in terms of what people may suggest, especially with the deficit, the general consensus is, well, the more money America borrows, for whatever reason, most of that seems to work its way back into the stock markets. And, like it or not, stock markets are still, or Bitcoin is still very strongly correlated with the stock market. So what you can see on the chart here at the moment, Bitcoin's in white, it's the one on the top. We've then got the NASDAQ in purple in the middle, and then the red one is the S&P 500. And I'm on the weekly time frame here. Yes, okay, they may not be correlated to the minute, to the hour, to the day, but generally you can see, I'm going back to 2016 here, and of course I've had to kind of manipulate or squeezed the ratios to the right side to fit them all on. But generally you can see upticks happen here, drops are happening similar times, drops are happening. Obviously March 2020 was an interesting time for the markets as a whole, but then we've seen that rally through to it. Then the markets, including Bitcoin, peaking in November 21, before then heading back down, finding, again, all of the markets finding some sort of common ground in around November, December 2022. And then we've just seen generally steady growth all the way through. I will concede that obviously the tariff announcement back in March and April of this year hit the traditional markets far greater than it hit Bitcoin, but you can still see dips across them both. And what's more important is all three of them on the weekly time frame have just hit new all-time highs last week. Bitcoin's close last week on the weekly time frame was the highest it's ever been in its history. So we are still seeing that correlation, and whether we like it or not, that is where it sits. And so going back to that big beautiful bill, if this does allow some fresh injection into the economy through borrowing or whatever they're going to do, I'd say generally we'll probably see that trickle into the traditional markets, and then some of that will trickle over into the Bitcoin market. There's no time frame on it, obviously, so it's not like right by now, but just an interesting side to make. Speaking of institutions that are gobbling up Bitcoin, BlackRock, we talk about them every week, but they finally crossed a fairly fundamental threshold with over 700,000 Bitcoin in their reserves now. So that's over 55% of all of the Bitcoin that's held across the ETFs. That's a bit of a misnomer as well, because that includes Grayscale, which we know has been selling ridiculously. But BlackRock have crossed that threshold now. And at the moment, in doing that, they've basically spent 53 billion to get those 700,000. And when we go on to Arkham, we can kind of see that that is worth approximately 80 billion. So, in the 18 months that ETF's been going on, that's not too bad an uplift. And for those of you that can't be bothered to do the maths, I did it for you earlier. 53 billion divided by 700,000 is 75,000. So their average buy-in price for Bitcoin at the moment stands at 75,000. So that would effectively be their break-even point. So, a fairly healthy buffer at the moment. 75,000 is obviously where we dropped back down to, however many weeks ago that was. Not saying there's any correlation with that there, but it's interesting to know that, BlackRock, as big a player as they are, basically got back to break even before starting to turn into profit again. But 53 billion to 80 billion in 18 months from a traditional investment point of view is like a rocket ship. So you can see why there is still a very strong uptake on the Bitcoin ETF. And I've spent the last, I don't know, feels like 2 months at least questioning the 4-year cycle. And I always come back to, unless it's actually broken, I'm going to believe that the 4-year cycle is going to work, and we'll see where it goes to. But the thing that always just sort of sits in the back of my mind, and everyone talks about this time it's different, I'm not sure that it is, but the one big glaring difference is a diamond hand like BlackRock. That's not fair. I'm not going to call them a diamond hand because we actually haven't seen how they'll act in a genuine bear market. But if it's not BlackRock, it's strategy. Between those two, they have 1.3 million Bitcoin. That's over 6% of the entire supply. It's actually more than that when you think that we haven't actually mined 21 million yet. But it'll be interesting to see in a bear market how BlackRock does. And if anything is going to break the 4-year mold, it's the ETF, and it's the institutions, and it's the private companies that we'll get on to talk about a little bit later on. Let's just talk Bitcoin. We'll cover a little bit more news when it's relevant later on. But just having a look at Bitcoin's price action. I don't know why this is so zoomed in. Just bear with me. And even if we were just to, let's just get rid of the EMAs for now as well. If we just look at just the charts, just the candlesticks. I mean, we know for the last sort of 8 weeks, we've effectively, all we've done is range. Yeah, we may have moved up 1,000 and we've come back down 1,000, but effectively we've just gone and ranged. Granted, anywhere from about 104 to 110, but generally that mean level is about 105 right now. And yeah, okay, we're $4,000 above that. For those of you that like to trade, there's been plenty of moves up and down to do that, but there's not been any major move since we had that large move up and that recovery sort of in April. And we've just been consolidating. And I've talked about this a number of times that after moves like that, we have seen time and time again with Bitcoin that it will take the time to then catch its breath before making the next move, whether it be down in 2023, 2024, beginning of end of 2024, and I suppose this is currently the middle of 2025 that we're seeing it. But we just don't know how long that is going to move to the right hand side, and that's what is bugging all of us. Whether you are a Bitcoin maxi or you're waiting for your altcoins to be risen from Bitcoin, this is what the move that we're waiting for. And I just stress again, it's patience. Don't be that person that becomes impatient. And I can't remember the old Warren Buffett adage about, trading is about, moving funds from the patient to the impatient, or the impatient to the patient, or whatever it is. But you get the point that, we don't always have to be running at 100 miles an hour. Let's just, take some time to reflect from where we are. Not many of us have got in this late into the market. And so we can take that time to reflect. And you know what? I'm not saying it is, but if it was the top, then okay, we'll find those signals later on and we'll deal with it. But right now, don't do anything rash, particularly, and I'll zoom back in and then we'll get, what, in my opinion, what really is the point in buying Bitcoin right now at 109,000 for 2 reasons. One, oops, I'm going to have to draw this now. Okay, I didn't want to. How can I do this? Let's just get a clean chart. Tell you what. Just ignore this a second. Have I got a clean chart somewhere? Here we go. Apologies. So one, we've kind of got this level here. Whether you want to, that was how I previously drew it. So it kind of looked like that. And we have over the last 5 days sort of like just punching around that upper band of that channel. And I appreciate I've only drawn the upper band. But two, the all-time high being here. What is the point of going right now? For me, I'm going to just decide, right, I'm going to YOLO in for Bitcoin and make that move when we're only $3,000 away from the all-time high, which is going to act as a massive psychological barrier anyway. And what would you rather do? We're battling this resistance line or this support line. and we've not made that definitive move from it. It's actually just sit on your hands, wait for the chart to tell you the move. If we're going to break all-time high, we're going to make a next move up. Okay, so we don't need to think I'm going to miss out on $300 here. I've really got to wait for that. Just be patient. Let the chart tell you where it's going. Similarly, we may end up breaking down from here. And earlier on today, it looked like we had. We've been down at 107,500 today. We've been up at 109,500 as well. So we've seen that volatility today as it is. Just let the pattern play out. I appreciate if you're trading, then that's different. But if like a lot of us, just sitting, hodling, just waiting, maybe seeing if there's an ideal time to buy back in, allow the chance to make that move for you. Get rid of those two. Sorry. And I think that was on the monthly. I'm sure that'll become relevant a little bit later on, but I'll try and get it ready for when I need to talk about it. Right, so going back, here's the standard kind of charts that we look at. The fibs, we can, we're about to rebattle that fib, and that fib, the 2 level on the fib, 109,727 as I have it, really good resistance. So again, going back to that, just be patient, let it see if it can move even there. Even if you're looking to actually trade it, see whether or not we get up and reject it. If we break through, here's a liquidity level, and this is stacked, this is glowing now. It's that much sort of short liquidations are in there right now, that feels like beautiful liquidity for the market makers to go and attack once they do get into it. Speaking of liquidity levels, we had this one at 106,400 down to 105,000, eaten through on Wednesday, so back into Thursday and sorry, Tuesday and into Wednesday. And then what do we get? We got to the very bottom, it was down there, and we've just reversed. We come back up, we got all the way up. Look where we got up to, right to the bottom of that liquidity level, 101,500, just taking out all the little bits that had been building since that previous peak at the beginning of June, but we couldn't find the energy to get through into it. And we've just sort of started to consolidate underneath it. Levels that we're seeing, significant levels that we're seeing, we've got this 105,000, to 102,700,000. Nice big block down there, which has been building for, best part of 2 weeks now. But as I said, we've got this sort of $3,000 range in and around, or sort of floating above and below the all-time high of 12,000. So 2 great levels there. For me, the biggest thing that's going to hold up getting through that is going to be not just clearing the 2 Fibonacci level, but sticking the landing and staying above it. Because as I said, we don't last the day. These are 12-hour candles here. We don't last 24 hours before we come back through. So that's the next hurdle. We see that, then maybe we can start talking about 113,650. The lower ones, yep, they're still there. They're building. But there's no point really talking about those two unless we get through either one of these twos here. So that's where those currently sit. So talking about July, and for those of you that were sat waiting for the stream to start, you might have seen the thumbnail kind of highlighted July. And Q3 kind of gets a bit of a bad rep for cryptocurrency because August and September are generally bloodbaths. But if you actually look, July, there's 13 Julys, including this one on this chart, and this only goes back to 2013. Only 4 of them have been red, and they've always been single-digit reds as well. So July is actually generally a good month for Bitcoin, and with that in mind, are we ready for that blockbuster move up, making a new all-time high? And could this be the start of the next leg all the way back up, similar to the legs that we had and the announcement of the ETFs on after the Trump election win, even generally after the inauguration, after the shakeout from the tariff announcement end of March, beginning of April? Could we see that level of significant kind of move starting to form this month and taking us through to, let's face it, these 5 black boxes here are the remainder of the 4-year cycle. And if you have a look at Bitcoin, actually, when you look at July, I'm trying to find my arrows here. Can't find them. You know what, stuff it. Here's one I did earlier. When you look, you might not see it all because my head's in the way. Just move that way. So each one of these white arrows is pointing to July 2013, July 2017, July 2021, and then this month. Okay, ignore the percentage ranges. I mean, you can look at them whilst I'm chatting. But what you can kind of see is that in the 4-year cycle, in the parabolic year, the July month was, for me, a bit of a catalyst for that final move, that final sort of death rally up, soaking in retail as best as we can before we get to that blow off top. And in 2013, we kind of had a bit of a downtrend. July saw us with a very nice low test in the end, and then the springboard to take us all the way through to its peak in November. Similarly, in 2017, we can see another low test, and then that move up. And you know, following these moves, very few months were red. In fact, most of them were green. We get to 2021, and I appreciate I've preached for 4 years now that a lot of the metrics said that April was the peak. However, it wasn't financially, price-wise. And we can see in July, you know, we had April, May, June correction. July turns, you know, we're still with a decent wick down to the south, and then that nice strong move up, taking us into the all-time high. And whilst it's not necessarily as clean as that this time round, the July candle hasn't printed yet. We're only, 8 days into it. We can see a period of consolidation. We start to see that move up. But what I'd be really interested to see, do we see that move down, creating that tail, and then finishing the month strong, and we see that sort of positive low test that we've seen before, which will just help to create the momentum, which will then in its own turn generate the hype, which will then in its own turn hopefully bring in retail. And what is interesting is when you go and have a look at the Bitcoin monthly returns, August is a terrible month for Bitcoin. It is horrendous. A lot of double-digit drops. But let's have a look. August in 2013, final year of the bull run, it was green. August in 2017, final year of that year's bull run, it was green. August in 2021, you know what I'm going to say here, it was green. And that's no guarantee that August next month is going to be green. But in the last 4-year cycle, parabolic years, actually August has been okay. August has been pretty darn good, to be fair. 30%, 65%, and a meager 14%, but still positive moves nonetheless. So again, we'll have to be patient, let that play out, and maybe we actually might get some more confirmation that history is rhyming. We are going to start to get it, and you know, this is not exactly the be-all and end-all indicator. What I was looking for was a sort of an amalgamation of, you know, YouTube views or Google trends or whatever, just trying to get an idea of when does retail really flood in to the market. But what this is spot retail activity through trading frequency surges. Okay, so this is like, when are we suddenly seeing exchanges getting much higher volume? Could be for smaller amounts, which typically retail would be buying. When does that occur? And this only goes back to 2017 because there weren't that many exchanges before then. 2017 arguably was the first retail market. But you can kind of see, you know, it's hard to, when I hang over it, it kind of disappears. But we've got neutral, which is like there's no information. Few, which is it's less than we would have expected. Many retail, and then too many retail. The too many retail likely tying in with blow off tops. And at the moment, the point here really is you can see in 2017, you can see in 2021, although leading up to the April one, I appreciate, we saw that. We saw in and around the ETF hypes, similarly in 2024, retail really flooding in. And I think most people would agree, March 2024, meme coin mania really was probably the last time that altcoins really pumped. And if you've been honest with yourself and go and having a look back at your portfolios, your altcoin portfolios are still probably never as high as what they were back in March of 2024. So this at least gives us some indication of when retail is around. The point I'm trying to make is retail are not around yet. But moreover, look, you know, retail don't come in till late. So if we go to July in the parabolic year, there was no retail here. Retail didn't come in till November. and then they took it up. And that matches with price. In that one, we went from 7,000 to 20,000, nearly a 3x in a space of a month, because retail flooded in. Similarly, I mean, you could argue again in sort of May, June of 2019, when we got back up to 14K, there was a lot of hype in and around that. We saw that move, but you can see how quickly it happens. Matter of weeks, retail need to be in, blow all their money, and then get wrecked. Because once they come in, the smart money is going to start to move out. But it doesn't seem that it's there yet. 2021, we can see that same picture. But the point I'm trying to make is that we haven't got it yet, and we may not need to see it in August. We may not see it in September or October. It could well be as late as November before they start to really arrive, and then we start to see that price really move up. So definitely something to sort of think about there. And the other thing that I touched on a little bit earlier on is it's institutions, it's private and public companies that are now buying up Bitcoin. And okay, we are still institutionally driven right now. Price action is definitely moving that way. This chart shows here that retail aren't there. Last week I showed you Google Trends. We're not there with retail. But we're starting to see more and more public and private companies buying Bitcoin with the thought process of a strategic reserve. And I'm trying to think the wording of that adage. We've used it so many times in crypto, and it's like, what is it? They ignore you. First they ignore you, then they laugh at you. I think then they fight you, and then effectively you win, they join you. And it kind of feels like we're in that latter phase now. We've done, years of being either ignored, fought, laughed at, whatever. Suddenly a lot of companies are getting smart to actually, Bitcoin shows some real stability, some real store of value here. And if you're planning on holding it for the long term, so, a really smart move. And so we are seeing every day new companies announcing that they're actually looking to do a strategic Bitcoin reserve. The blockchain company, the smarter web company, two that have continued to explain how they've been doing it this year. All you have to do is follow Bitcoin Magazine. You just scroll through every day. It's either a new nation or a new company. So that Monero, I don't know how you pronounce it, they just announced today that they are going to enter a 500 million SEPA to buy Bitcoin. We'll scroll down. I think there's a couple more. Might have been scrolling up. I mean, Metaplanet, they're continuing to take the strategy kind of view of just continuing to buy strategy, continuing to try and use the infinite money glitch to buy more themselves. Spain's second largest bank is opening it up for retail customers. There's Metaplanet yet buying some more. And this is just becoming more and more now. And I find that interesting that that's where it's going. And we have had a look at this in recent Avenger calls. But, this is 100, well, it's only 60 here. But if you scroll down, you can get 143 companies and their Bitcoin holdings that they're sort of declaring. There's loads of other websites that do private companies, everything else. I'm not necessarily bothered about that. But what I'm saying is, these companies are now buying it as a strategic reserve. The idea being, and appreciate that, they're human beings that can get shaken out at the same time, but ultimately they're trying to buy and hold this. And that goes back to that point I made a bit earlier on about, if anything is going to break the 4-year cycle, it's going to be the fact that actually we've got more diamond hands. They haven't proven to be diamond hands yet, but if they can prove to be diamond hands, we've got a lot more of Bitcoin held by companies that have boards and will need to vote on whether or not they want to sell that. What I do find interesting, and we're talking about public companies and votes, is we still haven't had one of the big three, Meta, Amazon, or Microsoft, take that stance, that strategic Bitcoin reserve stance. And actually their shareholders here have overwhelmingly voted against it. And I wonder whether they're regretting that now, they're happy with where they are, but most importantly, at some stage they will break. It's not unless you're, Peter Schiff and you're just stubbornly refusing it. These guys, all these companies have shareholders, okay? They have investors. At some stage, it's going to flip. And when they do, and we really get that, I think that's when we're going to see it. They'll be late to the party as well. So they'll be doing what strategy are doing, whatever, trying to get as much as they can. And they'll just pay for it because they're late. And this goes to this next slide, which I think this is a really telling slide, or chart, shall we say. So I've just zoomed it in. It does go back for 2 years, but it doesn't necessarily matter. So this is all of the Bitcoin available on exchanges, okay? So spot buy Bitcoin. And back when the ETF started, there were effectively 3.2 million. You know, you fast forward 18 months, we've only got 2.3 million. So in the space of 18 months, we have taken 5% of all Bitcoin that was available on exchanges, or all Bitcoin available, but just also happens to be on exchanges, has gone to wallets. And that doesn't take into account OTC deals either. This is what people are actually going onto an exchange like Coinbase or Binance or whatever, buying it and removing it. And with nations, with ETFs, with private and public companies, the supply squeeze is real, okay? So when we talk about what could be the catalyst to really take that next leg up, you know, it could be that. And we haven't even talked about the Lummis Act, the Bitcoin Act, whatever you want to call it, in which the United States gets involved with their 200,000 Bitcoin purchases every year for 5 years. That's going to take a massive dent into the supply. And then we really will have a supply squeeze. And people talk about it, but most people that I speak to that own Bitcoin don't want to swap it this cycle. They don't want to take the risk of moving it into an altcoin on the thought that they'll buy it back later when Bitcoin dominance flips. They're not willing to take that risk, or certainly not with all of it. And that is a different mentality to what was had previously. But going back to, you know, reasons for this to move, I think this is a really big indication of how serious the supply squeeze is suddenly getting. And whilst not necessarily relevant to the Lummis Act, although it may well get discussed, don't forget, I don't think it's next week, I think it's the week after, but the United States Senate has effectively put aside a week to discuss crypto issues, whether it be the Genius Act, whether it be the Clarity Act, whether it be the Bitcoin Act. They're going to spend an entire week focusing on those, and that could be good or bad, don't get me wrong. The way this Bitcoin has suddenly been accepted, cryptocurrency has suddenly been accepted in the United States, I'd like to think there's going to be some positive articles out of that, which again may just start to encourage that further move. And you know, as much as I give altcoins a bit of stick at the moment, if Bitcoin flies up another 50,000, altcoins are going to move as well. They may not eat into the dominance, but generally we're going to see that flow into altcoins as well, lifting it up from that 1.1 trillion that it's currently at. Can't tell you where it may end up getting to. Mo's put a few questions. Let's have a look. Isn't the narrative of this cycle institutions and nations? No AI, anything previously thought. So I think the altcoin narrative is AI, absolutely. But I don't see I don't see the overall narrative being anything other than Bitcoin. And the dominance, in my opinion, strongly suggests that. Whether you look at the time it should have taken for Bitcoin dominance to drop and break into altcoins, that hasn't happened. The real outliers in altcoins that have actually flown up in terms of AI, can you name any? I mean, Tensor hasn't, it's half of its all-time high. And I think that's the highest AI token at the moment. I'll have a look at that a little bit later on. So, we as retail altcoin fanatics want AI to be the narrative, but I still think at the moment the overriding narrative, in my opinion, is institutions, nations, and private and public companies just buying them up. AI being the long game going forward, with a pick'em battle to be seen which one flourishes. RT banking on Tau. Yeah, RT are banking on Tau, and I've fallen foul of this myself. We haven't really seen an altcoin survive, well, maybe Ethereum, into a second cycle. So, we don't know, as much as we might like what BitTensor does, between now and 4 years' time, something else may come that captivates other miners, other people that are interested in actually, the doing part of decentralized AI. And we can't rule that out. And while a lot of people try and replace Bitcoin every single cycle, it has never been replaced in what it does. So, yeah. But you're right, we are banking on Tau. And I'm solely banking on Tau. You know my stance with subnets. Alt season, is that even a thing this cycle like the previous one? Landscape does seem vastly different. I accept that. And we have seen alt seasons. They've not been long drawn out alt seasons. They've lasted 4 weeks, but we have seen, the alt season matrix get into the high 70s. We have seen Bitcoin dominance pull back 4 or 5%. 4 or 5%, in the right altcoins is gonna move. So yeah, I think that's fair to say. But let's have a look at some other things to talk about with Bitcoin. And I'm just, okay, yeah. So where could we go price-wise? And accepting that we don't know when we may break out of this, we know Bitcoin's price will increase. We know that. Even if it takes us 5 years, we know it's going up. But assuming that we're staying with that 4-year cycle, taking the assumption that actually July is a good month, and July in blow-off bull market years is also a good month, let's just make that assumption. Let's try and end on a happy note that actually we are going to see some positivity. So where could we go? And I think there's two things that really sort of sticking out in our face here that I haven't really talked about one of them. And I think it's fairly obvious now you see it. I mean, that looks like an inverted head and shoulder to me. I can't unsee it now I've done that. And if you want me to draw it a little bit better, let's get the tool out. I don't know where the tool is these days. Not there. Not there. Maybe we won't. It's got to be in here. Here we go. So I don't know. Maybe we do this. Left shoulder down to the head. Sort of like there. Here. And then we're just waiting for that level, aren't we? But that's kind of what I'm seeing. That's how I would sort of portray that. Now, let's just use that as a rough example. Where could that take us? Well, rule of thumb, tip of the head to the neckline, and then from wherever it breaks. And that's not a straight line here. Let's try and draw it straight. I know, something like that. Let's say it does break here. We're potentially talking 160, 165,000 on that next leg up. And that is not too far-fetched. We've seen strong moves. I mean, what is that in a percentage move up? Probably shouldn't have, even from here. It's a 50% move up. We've seen those moves. We've happily seen those moves. We've seen from 52,000 to 110,000. We've seen 100% moves. We've seen a $50,000 move. So those moves are absolutely possible. So, 160, not saying that's going to be the top, not saying anything like that. Just if that pattern there was to play out, then that's potentially where we may see it going. And then, the other one that I've been drawing, and we'll look at smaller time frames in a minute, don't worry. But, if we just look at this pattern here, which we've been talking about, which is sort of, I don't know whether you want to draw it like that, or whether you want to draw it like this, however you want to draw it. I was previously drawing it like that, so we'll just stick for continuity. And then we had this sort of pattern here, and we were saying, this kind of feels like this is some form of a bull flag. And well, assuming that we are breaking out of it, where's that move take us to? Well, actually, funnily enough, that's taken us to that just over $160,000 level. So, two of the most basic TA patterns you can do, and some people are going to say, they don't always play out. I get it. I'm not guaranteeing that we're getting there. Just two patterns similarly playing, suggesting that that's where we're going. Now, my worry is that, looking through crypto Twitter and YouTube over the last couple of days, I've seen a lot of people sort of talking about this $150, $170 level, $1,000 level, just in their titles alone, which makes you think, a lot of people are talking about it. Is it actually going to happen? I think it'll happen. It's just, it may not be the first thing that happens. And, actually maybe we need to be a bit more, pessimistic and say, actually, we'll get that move back down here and then the move. Now we're suddenly talking about that $150,000 level. Okay. I'm not going to lose sleep over 10,000 between 150 and 160,000. Now there are, where it's gone to. I had another pattern earlier. Anyway, I'll come back to it when my mind remembers what it was that I was talking about there. But what we can say, what I should say is we just don't know when that's going to break. Now, July it could be, August it could be, but But I think we're going to have that move up. What we've got to bear in mind is once that move happens, we're going to need time to breathe again. Last time we had a 100% move, we had to pause for 4 months whilst we did it. And so we get up there and we have that pause, then we are really talking about the deadline for the 4-year cycle. And so then we need to be securing ourselves in our mind as to whether or not we need to actually put our realistic hat on and have a look at where we genuinely stand in the market and how we can look to maximize any downside that's going to come. And next week, I'll go over some of the larger on-chain analytics, sort of, pi cycles and all that, just see how they're heating up and whether or not some of those are going to tie in with where we hope they're going to be for 4-year cycle. And also bearing in mind where the price strategy was. And when I did that call in the cuddle, I think the price range was unfortunately anywhere from 140 to 250,000 across the 30 that I looked at. It'll be interesting to see if that range is now refined, bearing in mind we're 4 months on and we've only got 4 or 5 months left. So something interesting to potentially have a look at next week. Let's have a look at a couple of the questions and then we'll get into some deeper down charting. So Chris, thoughts on CoinMarketCap Plume, links with the SEC, Trump, etc. It's a real world asset. TA and fundamental thoughts, please. This is how out of the market I am in terms of alts. I hadn't even really heard of Plume, to be honest. So my fundamental side of this, Plume, as I understand it, is effectively a blockchain that is being built in EVM, so an Ethereum virtual machine. So it's an ERC20, and its focus is to sort of help develop for real world assets. So that sounds like a great thing. I just don't think we're in the right cycle for that right now. Yes, they still need to set up, and I'm sure, launching only 3 months ago, they weren't thinking about just trying to time it just to be in the top. They're looking at putting the groundwork in so that they can be in place. And ultimately, the tokenization of assets, although it's already started, I feel like that's something that's really going to pick up in the upcoming years. And so whether or not it's going to be right for this cycle, I'm not necessarily there. But if this can deliver, if this can help the likes of Ondo, or I can't remember some of the other ones when I went in with the white paper, because I did have a look at the white paper. I can't remember where it was now. But if it can help some of the real world assets sort of develop and utilize that ecosystem for their benefit, then I think that's going to be well positioned to do that. In terms of price action, I mean, it's done nothing really. It's actually down 50% from its launch. It was at 15 cents and it's now at 10. No, it's not. It's down 30%. Sorry. Done maths there. It's got a $10 billion max supply and only $2 billion circulating. So granted, it's only been out for 4 months, but it's only got 20% of its circulating supply there. It is listed on a lot of exchanges, although I note no Binance, no Coinbase. So still some tier ones that it can be listed upon. I don't really have too much more to say about it. I'm not looking to invest in any altcoins, any new altcoins at the moment. I'm trying to get out of altcoins. So apologies for that. I'll do some better charting on it, maybe when it's a little bit older. But I think it may well be positioning itself for a potential, good sector to be in for the next cycle. You've then asked me to go over my thoughts on Circle, TauX, and Oblong, as you're thinking of converting some of your ETH in the SIP over to these or to this. So, well, let's talk about Oblong and TauX first. So, I don't have to be careful with what I'm saying because I know Sam dropped some news on Thursday about Oblong, but that's got nothing to do with me. But I will choose my words carefully. And I think, look, regardless of what this thing has done in the past, but in the past, just, I don't know how, but at some stage, this thing was worth 450,000. Know nothing about the company. That's how it launched. And since 1995, it's been in terminal decline. And I mean, to go from 457,000 to $4.57. I appreciate things are changing. They're looking to totally rebrand and reutilize how that's doing. So we can kind of ignore the TA side of thing. For me, whilst I completely understand the strategy-esque, or the strategy they are employing to copy strategy, let's call MicroStrategy, not get tongue twisted here, and to go completely into an asset. My issue stands that it's not a TAO thing, it's not a BitTensor thing. It's an altcoins are far more volatile than Bitcoin. So in a bear market, Bitcoin may fall 60, 70%. Difficult to ride out. And we saw MicroStrategy, in the deep part of 2022, when we were down at 15,000. I mean, people were talking about liquidation events and everything else. But altcoins can drop 90, 95, 99%. And I suppose the question then is, how do they stay afloat? What's the structure? And, each of these companies need to define that with potential investors. How are they managing, the loans to purchase all of the TAO and everything else, whilst also staying on board with, dividends and paying out stakeholders and keeping investors engaged and also coming through the door when, we still don't really see altcoins survive, flourishing through cycle to cycle. So I'm not necessarily interested in taking that risk with my pensions. Pensions, we're talking about decade-long plays. We don't know what altcoins are going to be around in decades' time. We don't know that Bitcoin will be around in decades' time, if we're honest, and we don't know that fiat is going to be around in. So everything is a gamble. But when we're talking about cryptocurrency, the more legitimate has to be Bitcoin. And when you're talking about your pension, for me, it's safety first. That's your crash mat in case everything goes horribly wrong. Use what you got now for a bit of fun to try and bolster that. But that's just me. Maybe I'm a bit too risk averse, but that's my view on it. So I'm not really into Oblong. I'm not into TAOX. I haven't looked into them. All I know is that TAOX has recently changed that strategy and Oblong's now looking to do that. So, hey, if it goes the right way, then that's a great play. But I think, this is not something to move 100% into, edge yourself into it, tiny amount to start off with, so you're positioned if you want to get behind it and support it, but wait for it. Wait to see that sustainability over the course of cycles. So that BitTensor is going to remain around. That's the key. And that's not me crapping on a token. It's just the reality of altcoins. Circle. So Circle's an interesting one. Let's get it on the daily time frame. So Circle's one I've talked about for a while. Circle one is definitely one that I am interested in investing. And when the IPO was announced and we were told it was going to launch for about $25, I thought, well, we'll see it get up to 100, 150, and we'll see it come and crash back down. We have not seen that. In fact, we've seen nothing but support for this IPO. We got all the way up to $300. We did see that correction down to 175, but it's kind of starting to recover. And so I want to invest some part allocation of my pension into Circle. I do feel that Circle is a completely different play to the likes of Oblong or TAOX. The reason behind that is Circle is playing, is the provider, is the parent company, if you will, for USDC, which is a stable coin. So it has stability within its price. But just given where the United States is going at the moment, the total aversion towards CBDCs, the onboarding of stablecoin regulations with the Genius Act, Circle is a play. And I think Circle is riding that hype at the moment. And I feel like it is an error, it's rashness for me to jump into it. And if I have to wait until the end of this cycle to get in, I'll do that. And I still stand by, IPO's always correct, okay? There is a lot of profit that has been made from, it opened at 63. We know it was selling at 25. There's a lot of profit that's been made in this run up. At some stage, people are going to take profit, probably when the overall markets have a correction. And you just look at Coinbase. Coinbase, the success story at the moment of cryptocurrencies listed on the NASDAQ. Well, you have a look at how that thing launched. I know it didn't pick the best time to launch. I completely accept that, in July of 2021. But when it got to that bear market, so it launched, it dropped. So we saw that correction, it rallied back up, bear market hit. And we went from $350 to $32. And so I'm thinking I'm going to just wait. And if I have to wait and put that money elsewhere temporarily until we see what it does in a bear market, then I'm happy to do that with Circle, because it's a decade-long play, and I don't feel the need to sort of just throw myself into it. I'm doing it with my SIPs. It's not like I can take out the profit and go on a nice holiday or anything like that. It's just there. So much is the mentality in my mind is just like, I can't really deal with any of the profits until I'm much older. So, I'm happy to play the long game. It's like what I do with my company in the Bitcoin that it purchases. So yeah, so that's where that one currently sits. Away days put, seen a few interviews this week with companies setting up some ETH strategic reserves. Tom Lee's company Bitmine, another one's doing well with ETH co-founder at the helm, Starlight Gaming. Then also heard a big mining company just sold 280 BTC to buy ETH. So definitely some bullish news going on there. And again, so you're right. If you were going to go into an altcoin strategic reserve, which one are you going to go into? It's got to be Ethereum, hasn't it? Because it's the one that's proven itself the best. Regardless of price action this cycle, which is underwhelming, it has survived. It's still the second largest altcoin out there, considerably. And if you get rid of stable coins that are beneath it, it really does stand leap and bounds above the vast majority of the top 20 outside of it. It has an ETF around it, which is picking up. The ETF is it was stalling before, Ethereum ETF. It's getting there now. Oh, Solana's on there. But we're starting to see a little bit better with some buys sprinkling around. Normally this was either red or zeros, but actually BlackRock, God, I couldn't think of their name, and Fidelity are actually doing something about it and buying. And the rest don't really seem to be buying anytime. So just ignore those. These two I'm interested in. 5.6 billion Ethereum bought by BlackRock. Let's have a look at Solana. Not much, 20 million. So far, but you've got to start somewhere. Okay. And then Mandy's put, hi there's so many EMAs and listed a few. Can you please explain which ones you tend to pay the most attention to, on what timeframes and under what circumstances? Okay, let's clear this. So there is an infinite amount of EMAs. So an EMA is, whether you see it as a 5, 1, a 2, a 5, a 9, a 10, a 20, all that number is it's just taking data from a certain amount of, time periods back. And that depends on obviously what time frame you're on, and then how far you want it back. So what are the more common ones? And then what do I use? Probably the easiest. Common ones that you see, the 9, because when you set up an EMA, and remember, there's two types. There's a simple moving average and there's an exponential moving average. So we're talking about EMAs here, but same principle for a moving average or simple moving average, SMA. So when you select an EMA, it defaults to 9. So, people use 9 quite a lot. 21 is another very popular one. 50, 100, so round numbers, 100, 200, not so much 300 or 400. And I appreciate I use 800. But not everyone does that. So I'd say the most common are probably 9, 10, 20 and 21. So 9 and 10 pretty much the same. 20 and 21 pretty much the same. And 50. They'd be the key ones. What do I use? So let's go. So for the big picture stuff, I use the 20 and the 50 EMA, which hopefully these two are. Let's just double check. 20, yep. So the 2050 EMA is the blue, and then the 50 EMA is the red. And I use those across across all timeframes, because it doesn't necessarily matter, because as I say, it's just taking data for however many time integers back. It can still give you that picture. What I would stress at though is the lower the time frame, the weaker the EMA kind of is. And I don't know if that makes sense, but if I'm looking at the 20 EMA on the 1 minute time frame, that will get broken all the time. Let's hide the 50 1 minute time frame. This thing will just be snaking up and down across it. Just there's no real pattern or correlation. But if I go onto the 20 EMA on the daily, suddenly we can start to see areas where actually we're seeing sustained periods of support. So, you know, EMAs always have their purpose, whether it's on the 5 EMA or the weekly 5-minute time frame, or the weekly time frame. It's just how you interpret that information, and I suppose how much weight you provide it. So big picture stuff, I like, you know, using the 20 and the 50 EMA, especially with the weekly. And I've talked about this plenty of times before, but you know, 50 EMA on the weekly, which is the red one, that's your bull bear market support resistance line. So bull markets, we are seeing it staying above that. We break through it and we hold below it within a bear market. And right now, we've retested on it, but we are still above it. We're in a bull market. And that generally kind of works. Now, when I go to these other charts, everything looks a little different. So I've got all of these random things on, and that can be confusing. So what do I have here, and then why do I have it, I suppose? So you need to see them all. So I've got the blue, which is at the top. That's the 10 EMA. I've got the red, which is the 20 EMA. And the colors doesn't matter. It's just whatever works for you. I've got this, the 50 EMA. And then I've got I think it's the emoji cloud or whatever. It's just a cloud around it, which it kind of gives you a sort of a funnel around it. I can't remember actually how it works it out. I can't remember how many, you know, how many time frames in sort of like the opening and the closes or the wicks that it includes to be able to create that sort of shaded area around it. But it just gives me a little bit more information with on there, but you can turn it off. So I have the 50 EMA, then I have the 200 EMA, and I have the 800 EMA. And they're just ones that I use from the Traders Reality. It's not actually the Traders, but I start with the Traders Reality indicator. They use the 5 and the 13 instead of the 10 and the 20. I don't like them, so I changed them. But for me, I can just see patterns, and I feel that certainly the 50 EMA is whatever time frame you're on, but I always start with the daily is like my magnet point. But you can see trending periods here, and the 10 really does help hold it. It doesn't hold it forever when you see it break through, but then when you talk about where does it may stop and where can it move to, 20 quite often catches things. Now, the more we range sideways, the closer these get together, because as I say, it's just taking time. It's just taking price information from a certain amount of time integers backwards. So if you keep on ranging for 50, the 20 and the 10 and the 50 are just going to be on top of each other, which is why I like to have spaces for the 200 and the 800. Just give me longer term information within that. But it's totally whatever works with yourself. If you want to throw out the 63 EMA because you see that that works for another reason, then I say go at it. You know, as long as you can make it work, just try and stay consistent. That's all I'd say. Is whatever you do use, just use on every chart. Don't pick and choose the EMAs that you want. And I'd try and stick to round numbers. That's my personal opinion. Or it's just a 5 and 0 anyway, and take them from there. Not sure if that's helped or cleared up, probably neither. But now that we're on this and getting towards the back end, let's just have a look at where things are on the low time frame. And perfectly enough, Bitcoin on the daily time frame. What have we done over the last 2 weeks? So we came down, we broke through the 50 EMA, but we couldn't break through the cloud. And then with a vector candle, so increased volume, we managed to get through the 50, which is normally quite hard to get through, but it takes some movement to do it. Vector candle then gets us through it. We got above not only the 10, but also the 20. And then since then, the 10 and the 20 have provided that support and that pattern. And you can see, you know, we've just ridden above it. We've lost it. What caught us? The 20 EMA bounced back up, and now we're just riding that 10. Now, it doesn't mean that the 10's indefinitely going to hold, but I just kind of know. And look, you know, the opening and the closes are on the 10. The wicks are going down to the 20. So it kind of gives you that sort of view. If you're not trading it, as in perp trading it, then it's more just of a warning signal of a move that is going to come, and you can just prepare yourself mentally for it to drop. If you are trading it, then you can look at where your entries and your exits can be based off EMAs, and also where your stop losses can be, or liquidation points, however you want to to do it. So at the moment, we're riding up and about that. I've already talked about the fact that we're in this upper band of this descending channel, waiting for that move to come back up. Now, interestingly, if we look at the 50 EMA channel, we would actually have to lose the 50 EMA channel to get to the bottom side of this lower trend line, which could happen. We've got the 200 EMA coming up, but by the time that gets to the trend line, we're talking another 2 or 3 weeks. So, it could be 2 or 3 weeks, just slowly work our way back down. We break through that 50 EMA, but the 200 is going to come and catch up with us, help us get back through. Going on to lower time frames, 4-hour time frame, I just like to use. So typically I stick with the daily and the 4-hour. And obviously the 200 EMA on the 4-hour is like the 50 EMA on the daily, because have I done that right? Yeah. Oh no, I haven't done that right. Ignore that. Because obviously there's 6 sets of 4 hours in a 24-hour. Just been thick there. But we can kind of see here that this one has used that and then another clean bounce off them. So when they do go down to the 200, we can see that level of support. I feel like I'm still answering your question and not doing the charting, but it is working out quite nicely. And to be perfectly honest with you, Bitcoin is just ranging. We're nicely within that 50 EMA. But again, we're getting squeezed in and around all of these EMAs right now. And so I would expect some move away, or sort of move away from them, whether that is up or down. Something else will dictate where that's going. If we go down, I would suggest that an area of interest I would be looking at is going to be the sort of 106,500 kind of level, just because it's a 200 there. And we can lose it, of course we can. But usually we'll find it's either going to halt there or bounce from it, like we've seen in the past. But as we know, with other things that we look at here, we do have vector zones down here. I've said this now for probably the best part of 2 months. Every single vector within this ranging pattern has been recovered. And so it is, in my opinion, highly likely that these will be recovered. That's just my opinion based on past performance there and just on how the market likes to move. And as we know, as I showed you on this chart, we have a liquidity zone from 105,000 to 1,270. We're basically just at 105, we're at 104.83. And okay, it goes a little bit lower than the 1,200. It's 102,700, which is actually this bit. So you could argue that the thicker green actual vector zone here is that, which kind of ties in with both of those heat maps for liquidation points. So yeah, and to get there, we'd have to lose that 50 EMA. But you kind of know now, just having those on the chart, even if you're not trading, I don't need to panic, don't need to panic, don't need to panic. Oh, we're through here. What next? Well, we're getting pretty close to that 800 EMA. And if we lose that, then maybe we do need to panic and think we're going to those lower levels of the 90,000. But that's why it just gives me that level of, not reassurance, but, I don't need to fumble because I'm not planning for where things may end up going, because I can kind of see things that work out for me. So that's where that one kind of looks. Looking at BitTensor itself, I mean, these must be left over from Friday. Here's my problem with BitTensor, and it's still making lower high, and it's not making lower lows, but this is the lower low, and we haven't quite got down to it. So that 288 level, we are now in some sort of descending wedge pattern, which arguably you could say is going to break that way. But it could be redrawn to be sort of a bit more symmetrical, and so it's 50%. What I don't like as well is we are on the 4 hour, the 10, the 20, the 50, the 200, and the 800. Price action is below all of those, and also they're all in the correct order. So they are all, well, in the opposite order, really, as in the 800 is that far above it. It's at the top one. So that's a lot of work to get through. And even if we were to get through the 800, which is a monster level, only takes us back to not even 370. So we've got to bear that in mind. Now, again, to be fair, trying to get that same range period. In this here, every vector candle has been recovered. So at some stage, I do expect us to recover that vector candle. But there's also these vectors here to take. And so that just needs to be borne in mind. And the other thing I like to throw on, from a fib point of view, and this trying to think where to take it from. Sorry, let me just move that out of the way. Try that one again, shall we? Yeah, we take it to there and there. I'll get rid of, oh dear. Dear, dear. Let us then get, this is looking messy. So let me tidy it up so we can see what we're looking at here. So let's get rid of that. Let's get rid of that. Let's get rid of that. Sorry, I'm going to do it. Might as well get rid of them all. And so this is, the other main thing I use. Most of you are aware of it, but the fib level, I mean, that fib level from down this bottom to here on the 4-hour time frame, I think it looks pretty good. The only thing I would have expected is, and maybe if I draw it on the day, it'd be a bit different, is that you can see now by just moving up, and I appreciate I've cheated. Just because we've seen price action come up and down, I would have thought that had been bouncing between two fib levels, and you've almost got the 382 there as well. But we are battling that 618 right now. Let's put it on the daily, and let's just see if we can tidy that up to prove my point. I don't think we're going to be able to, but we will try. So we, not really. I mean, it's not a perfect science. I get that. Maybe if I'd done it from down here, it might be look a little bit better. No, I'm probably just forcing it, trying to have a look. But the point being, the reason these are colored in the way that they're colored is that, in my opinion, are the more favorable positions. So 382, the 0.5, and the 618. We are battling that $320 line. Okay, that has been the Gandalf line for a number of weeks now. Let me just get rid of that. And that old adage of the more you hit it, the weaker it becomes. We have, we've skipped across it, the skipping stone analogy. Now we are just sailing across it. We're just constantly hitting it. That to me feels like it's getting weaker. And if it does, what is there really? I mean, for it to hold, okay, it could go down to 3.7 and turn around once we finally reclaim this zone here. But I do feel that if we lose it, that retest down here, but I'd suggest that actually we may even get down there a retest of, let's just call it 290 for cash. And so the position I find myself in right now is I am not willing to get back in. Remember, my average get out point, I mean, I got out of 390, had that little move, so let's just call it 400. I'd rather take the risk of it potentially going back up and having to battle all of these, but want to see where that move is. And even if it does make it through, 320, I mean, between 320 and, between the 10 EMA and the 200 EMA, we're only talking about $25, which isn't, in the grand scheme, that big a thing. So I might as well just sit on my hands and wait to see how it moves up. Wait to see if we can get above that. Then we can say we've started to make our first higher high. Get above that. We can make another one there. Get above that. We can make another one there. And suddenly I can think, right, the trend's actually reversing now. Get back in. Okay, I might not have got the ultimate play, but it's all about just risk to reward, isn't it? And so I'm quite comfortable to sit on my hands, stare at the computer long enough. I feel like that's probably the better way of looking at it. Some of these other ones have moved quite well today. I mean, let's just have a look at Ethereum. So Ethereum, it's still got to make that move up to 2,700, that 618 level. But can you see, we are on the 4-hour. We've had that move down, but now, unlike, we are close. We are riding all of these very close. The 10, the 20, the 50, the 200, and the 800 are all within $200 of each other. When I spoke on Friday, they're all within $70 of each other. We are still moving away. We are trending up in the right direction. Okay, so we are making higher highs and higher lows. We haven't quite made that higher high. We have actually, if you look at the close, we did technically buy $7. And this is probably why Bitcoin dominance is coming down, because ETH's obviously the second biggest player in town. It's having a relatively decent move against Bitcoin. We have a look at the ETH Bitcoin. And yeah, it's still not looking great when you do it on the daily, but we are starting to see, you're not going to worry that this is going to be a Bart Simpson anymore. Maybe it could be a double top, but we're starting to move our way out of it. So that's why I think Bitcoin dominance is coming down with Ethereum. But it's still got that work to do. It's still got to get above 2,700. We get above that, we can really start talking about getting back up to 3,233, or at least back up to this level of volume. And we've got all of these vectors in which it can attack. But so far, that 2,700 level has been quite sticky for them to try and get through. In terms of other ones, I don't think there's really too much to talk about. Solana, potentially. Can't remember what all of these were previously on there for, but it had the hype of the ETF. It wasn't the world's biggest ETF, and it hasn't had that much uptake. But there is now an ETF for it. But that being said, what's happening? The 800 and the 200 EMA are just squeezing us right now. So we have just been squeezed in between these. And so again, we could quite conceivably have that move back down here to the bottom of the 800 EMA, taking out the remainder of that vector candle before we then start to look to move up. And it's a $20 move. There's plenty of volatility to play with if you're trading it, but don't be alarmed if we do. But if we want to be serious, we got to break 160. We've got to break 160 and move up. And if you want to be really serious, we've got to break 170 really and take this little vector candle out and start to move all the way back up. Anything else worth talking about? I don't necessarily think so. I'm just having a look, see what else there is. Tell you what, I think we'll just knock it on the head from there. Just to let you know, on Friday, my kids break up from school at lunchtime, so I'm going to do that live charting on Friday. I'm going to change it up a little bit. I will talk about Bitcoin, I'll talk about BitTensor, I'll talk about Ethereum, Solana, and maybe something as boring as BNB and Ripple. No one cares about NEAR. I've got a little bit left in it, not enough really to talk about. Similarly with Link and Ondo, and just trying to really get it down to that 20 minutes rather than 30 minutes that it's at. But that will be Friday. It'll be in the morning rather than the afternoon, at probably around about 10 a.m. But I will let everyone know when I'm going live on that. And then next week, there will be a video out, but it will be just a pre-recorded one as I'm away on holiday. It will come out Tuesday night like they do. And as I say, I'll go through the bull indicators just to kind of get a flavor of where we are as we enter the summer and see how long we've got left on this bull market. Other than that, just want to say thanks again. You got any questions, as always, tag me in Discord, send me some private messages. Hopefully I covered everybody's private message in the last couple of weeks. Apologies if I got a bit slower getting back to you on those. And yeah, enjoy the rest of your week. And if nothing else, I'll speak to you all soon. Cheers now.